Sum 1. Khushi and Gopi are partners, sharing profit and losses in the proportion of 2:3. Their trial balance is as follows. Prepare their final accounts after considering following adjustments. You are given trial balance as on 31st of March 2006. Debit balance is professional tax, machines, depreciation on machine 20,000, customers, rent 2/3 paid, drawings Gopi, carriage inward, 10% provident fund investment discount, freight octroi, land building, insurance stationery, bank balance, adjusted purchases, provident fund contribution, closing stock. Credit balance is capital Khushi Gopi 4 lakhs, sales Khushi's loan, provident fund, commission, bad debt recovered 4,500, traders means creditors 1,13,000, general reserve 18,400. Notice that in trial balance total of credit side is 12,58,400 while debit total is 12,48,400. So there is a disagreement in the total for trial balance. Now this difference is 10,000. This difference is to be identified as suspense account in trial balance. As the debit total is short by 10,000, I write 10,000 suspense account in debit balances. Now I have corrected the total of trial balance. Both the sides agree that is 12,58,400. Adjustments. Closing stock include stationery stock of rupees 3,000. Relevant items of trial balance. Stationery 3,600. Adjusted purchase is 1,50,000 and closing stock 1,10,000. These are the three balances which are relevant for this adjustment. Now let me explain the effect of this adjustment. We know the formula for adjusted purchases, that is opening stock plus purchases minus closing stock is equal to adjusted purchases. We are given adjusted purchases 1,50,000, closing stock 1,10,000. So we can work out the missing item opening stock plus purchases. After deducting 1,10,000, adjusted purchases left are 1,50,000. So opening stock plus purchases total thereof amounts to 2,60,000. That is 1,50,000 plus 1,10,000. This is the information available to us. Now stationery stock 3,000 is included in the closing stock. So remove stationery stock from closing stock. If you remove it, the closing stock of goods left with you is 1,07,000. So far as opening stock and purchases are concerned, they will remain same. So now your amended adjusted purchases are 1,53,000. It was previously 1,50,000. Now after rectification in closing stock, we get the adjusted purchases of 1,53,000. Means one effect of this adjustment is to reduce 3,000 from closing stock and add 3,000 to the adjusted purchases of 1,50,000. Now what are the effects of this adjustment? 1. Add to adjusted purchases rupees 3,000. Deduct from closing stock 3,000. Deduct stationery stock from stationery expenses. and stationery stock appears in the balance sheet asset side 3000. So these are the four effects for this adjustment. I'll show these effects while solving the sum. Now next adjustment. Provide 5% discount reserve on debtors. Customer's balance is known as balance of debtors on which discount reserve will be calculated, and this is a provision for discount expense, discount loss, so it will be debited to profit and loss account. Next adjustment is worth noticing for English medium students. Rupees 2000 are skipped to record in goods return credit book. Now goods return credit book is a English translation of Gujarati term Mal Parat Jama Nod. It is Gujlish translation. Mal means goods, Parat means return, Nod means Jama means credit, Nod means book. Once again, Mal means goods, Parat means return, Jama means credit, Nod means book. So Gujarati term is Mal Parat Jama Nod. It is translated into English Gujlish, that is goods return credit book, which has no real meaning for English medium students, but its equivalent interpretation is sales return book. So what should you understand? Rupees 2000 are skipped to be recorded in sales return book. So in sales return book, 2000 rupees entry is not recorded, so we have to record it. But notice that Mal Parat Jama Nod is equal to sales return book. Now next, total of credit notebook is undercast by rupees 10,000. Now credit notebook is a English translation of Gujarati term Jama Nod. Jama means credit, Nod means notebook. So Jama Nod, Gujlish translation is credit notebook. Its equivalent interpretation for English medium student is purchase book. So total of purchase book is undercast by 10,000. Now this is a totaling error. Its influence is on suspense account. Now if you look at it, the rectification entry for this undercast 10,000, purchase book undercast by 10,000. So what's the rectification entry for that? Purchase account debit to suspense account credit. Now as we have found out the balance in suspense account 10,000 debit balance, now effect of this rectification is to credit 10,000 to suspense account. So suspense account is closed, and this suspense account will not appear in the balance sheet, and only 10,000 will be added to the adjusted purchases. This is the effect of this adjustment. Provide 10% interest on capital. Capital of Khushi is 3 lakhs and Gopi 4 lakhs. 10% shall be applied to this balance, and this interest on capital shall be debited to profit and loss appropriation account and credited to partners capital account. Double the rate of depreciation on machine. Notice the balance of machine is 3,80,000. After providing depreciation 20,000, so 20,000 depreciation has already been provided and deducted from the balance of machinery, and the balance of machinery is arrived at 3,80,000 after deducting this 20,000. So what is the opening balance of machinery? Opening balance less depreciation is equal to closing balance. Closing balance is 3,80,000, depreciation 20,000, missing figure is opening balance, that amounts to 4 lakhs. Now 20,000 depreciation has been provided on a balance of 4 lakhs. So for 4 lakhs 20,000 is the depreciation. How much for 10%? How much for 100? So we can work out the rate of depreciation already provided for, that is 5%. Now we want to double the rate of depreciation. So now we intend to provide depreciation at the rate of 10%. So this 10% new rate of depreciation should be applied to the opening balance of 4 lakhs. So 4 lakhs into 10%, 40,000. 3,60,000 is the balance after depreciation that will appear in the balance sheet asset side. And profit and loss account shall be debited with a total depreciation of 40,000, that is 20,000 plus additional depreciation 20,000, 40,000 gets debited to profit and loss account. Now let us start with the sum. But before that, let us consider the hidden adjustment. 2/3 rent paid, so 1/3 is outstanding. Provident fund 60,000 and 10% provident fund investment. Interest on provident fund investment is credited to provident fund. That's an important point to be noticed by you. Now let us start with the sum. Here we prepare trading account, profit and loss account, profit and loss appropriation account for the year ended on 31st of March 2006, and the balance sheet as on 31st of March 2006. Over and above we prepare capital accounts. Let us start with first of all rectification adjustment. 2,000 are skipped to record in sales return book. So sales return unrecorded. Its effect is on sales account and customers account. Sales credited to trading account. Sales return not recorded deducted therefrom. Customers balance appear on the balance sheet asset side. And by sales return not recorded, if we record it, the amount recoverable from customer declines by 2,000. So 2,000 deducted from customer's balance, we get the balance of 1,52,000 for debtors, and that appears on the balance sheet asset side. Now purchase book total is undercast by 10,000. Its effect is on adjusted purchase account and suspense account. Rectification entry for this is purchase account debit to suspense account credit. Adjusted purchases I record on the trading account debit side. I have added 10,000 purchases to 1,50,000, and suspense account is balanced by this entry. So suspense account balance is nil, which won't appear on the balance sheet asset side, and adjusted purchases 1,50,000, 10,000 added thereat, it amounts to 1,60,000. Next adjustment, closing stock includes stationery stock 3,000. As we have already explained, closing stock 1,10,000. Stationery stock included therein is removed. So 1,07,000 is the balance of closing stock. 3,000 is added to adjusted purchases. So adjusted purchase becomes 1,63,000. Now you are given stationery expense 3,600. From that deduct 3,000. Stock means stationery purchased but not used. So by deducting this 3,000 from 3,600, we get stationery consumed 600, and stationery stock appears on the balance sheet asset side. So this is how four effects are found. 3,000 deducted from closing stock, added to adjusted purchases, stationery stock deducted from stationery expenses, and stationery stock appears on the balance sheet asset side. Provide 5% discount reserve on debtors. Debtors are 1,52,000, 5% there on 7,600 deducted from debtors and debited to profit and loss account. simultaneously debiting discount 1900 to the debit side of profit and loss account. Provide 10% interest on capital. Capital of Khushi 3 lakhs and that of Gopi 4 lakhs. Interest on 3 lakhs amounts to 30,000. Credited to Khushi's capital account. Debited to profit and loss appropriation account. Balance of capital for Gopi 4 lakhs. Interest at the rate of 10% thereon 40,000. Credited to Gopi's capital account. Debited to profit and loss appropriation account. Next. Double the rate of depreciation on machine. Now machine 3,80,000 plus depreciation already provided thereon, that is added back. That was a wrong depreciation, so we get a balance of 4 lakhs. On 4 lakhs 20,000 depreciation, so it was at the rate of 5%. We want to double the rate 10%. 10% depreciation on 4 lakh amounts to 40,000. Debited to profit and loss account and deducted from balance of 4 lakhs on the balance sheet asset side. So machinery appears at 3,60,000 on the asset side and 40,000 depreciation gets debited to profit and loss account. 2/3 rent paid 15,000. So 2/3 payment is 15,000. What could be the total payment? So total payment works out to be 22,500. So total 22,500 minus paid 15,000. Outstanding amount is 7,500. So 15,000 plus outstanding rent. Outstanding rent, balance sheet liability side 7,500. Next, 10% provident fund investment. Provident fund 60,000. Provident fund investment appears on the balance sheet asset side. Provident fund appears on the balance sheet liability side. 10% interest on investment amounts to 6,000. Interest on provident fund investment is added to provident fund and recoverable interest appears on the balance sheet asset side. So interest accrued on provident fund 6,000 appears on the balance sheet asset side. Khushi's loan 50,000. By default we should calculate interest at the rate of 6% as provided in Partnership Act. So 50,000 into 6% 3,000. Interest on partner's loan debited to profit and loss appropriation account and credited to Khushi's capital account rupees 3,000. Now all hidden adjustments are over. Now let us record all the debit balances from trial balance which are yet not considered. Professional tax debited to profit and loss account. Machinery depreciation, customer rent etc. taken care of. Drawings of Gopi debited to Gopi's capital account. Carriage inward debited to trading account. Freight and octroi debited to trading account. Land and building appears on the balance sheet asset side. Insurance being expense debited to profit and loss account. Bank balance appears on the balance sheet asset side. Capital, sales, Khushi's loan, provident fund considered. Contribution to provident fund debited to profit and loss account. Now credit balances are considered. Commission, profit and loss account credit. Bad debt recovered, profit and loss account credit. Traders means creditors, balance sheet liability side. General reserve appears on the balance sheet liability side. After recording all these balances, we should find out gross profit from trading account. Total of credit side is 3,08,000. Deduct therefrom adjusted purchases, freight, octroi and carriage inward. We get a gross profit of 1,40,000. That is transferred to the credit side of profit and loss account. Total of credit side of profit and loss account 1,40,000 plus 7,000, 1,47,000. Deduct therefrom rent, professional tax, insurance etc. You get a net profit of 55,500. This profit is transferred to the credit side of profit and loss appropriation account. Notice that interest on capital 70,000 exceeds the profit available for distribution. So there is a divisible loss. So this divisible loss will be distributed amongst partners in the ratio of profit sharing, that is 2:3. So 17,500 distributed in the ratio of 2:3. So share of Khushi in loss 2/5, that is 7,000, and share of Gopi in loss 3/5, that amounts to 10,500. By loss, capital declines. So Khushi's capital account debit, profit and loss appropriation account credit, same way. 10,500, Gopi's capital account debit, profit and loss appropriation account credit. Now let's close capital accounts of the partners. Total of credit side of Khushi's capital account is 3,33,000, deduct there from 7,000, balance 3,26,000. Same way, if you find the balance for Gopi, it amounts to 4,03,500. Capital balance will appear on the balance sheet liability side. Now find the total of balance sheet. On asset side, you obtain a total of 9,84,400. Same should be the total on the balance sheet liability side, that is 9,84,400.